give a quick background ourselves. This is Mani Parthasarathy. I am the founder of Habile Technologies. We provide digital lending solutions to NBFCs, MFIs, and Fintechs. And today we have our young entrepreneur, Mr. Gorav, in this webinar, who's a speaker. Thanks for joining me, Gorav.
Mani.
All right. So we have been discussing this topic, how traditional lending companies versus fintech lending companies, right? What is the difference? What kind of difference they are making? And when we go and approach the fintechs inside the market, right? And when we go and download the app or download the link, and then we enter, can we get a loan within a couple of minutes? And we tried download that app and then saw the output. It was really annoying, and we filled all the details and then press submit. Then we'll get an answer stating that our representative will call you back in 24 hours. So this is the frequent response that you'll be getting either in banks or in any fintech companies like that. So they call themselves as a fintech, but the underlying technology, I don't think they are actually following it. So we were actually contemplating whether actually is there any company who's doing a digital disbursement within a few minutes. So we were actually wanted to have a speaker who's actually doing a digital disbursement within a few minutes, and that is why we are having Gorav in this call. Why speed is very important in this particular current world is obviously it is a competitive environment. There is no doubt about it. And these guys, millennial guys, right? They have no patience at all in this world, right? They want everything in a single click. Even they are expecting a biryani to come in within minutes and grocery, whatnot. And why not lending? They also have to get a certain amount of transformation, right? They want everything in a single click. So speed has become very, very important nowadays. And post-COVID, there are a lot of medical emergencies is happening. So that's the surge of gold loan also. And of course, the small ticket personal loan is also one of the recently surge that I can see that. So when it comes to lending, the speed really even exists. And if yes, then how it is going to be and what is the intention behind conducting this webinar. Speed is a very most important thing. And without any further delay, I would like to introduce Mr. Gorav, and I have a short bio of him. I just quickly inform you guys. So Gorav is a commerce grad and a chartered accountant MBA in the 16 years of experience. He started his career at the Big Four KPMG. He possesses an invaluable audit experience gained from his time in different projects from various sectors, including technology, software, services, and manufacturing infrastructure. As a co-founder of Digi, he has been instrumental in bringing the tech stack with the competitive edge. And his love for technology and business, and I have known him for the past 1 year, the interaction with him and the passion towards an entrepreneurship and encourages him to learn and explore emerging technologies is phenomenal. And when he's not at work, you may find him having fun with friends. Thank you so much for joining this webinar, Gorav.
Thank you so much, Mani. Appreciate the introduction.
Thanks a lot, Gorav. And without any further delay, we can quickly kickstart the Q&A. I mean, I'll tell you the pattern of this webinar. This is going to be a very Q&A, and I'll be asking questions that we have collected from the survey. We personally called all the participants and understand what are the queries that they have. They wanted to talk to what they wanted to ask to Gorav, and we have collected those questions, and I'm going to ask these questions in a sequential way. Maybe Gorav can, with this industry experience, he can answer those questions. Okay, cool. So we'll start, Gorav. Okay.
Yeah.
So how the traditional lending happens, Gorav, if you can give a quick intro about that, will be a great helpful.
Okay. See, from a traditional lending perspective, I have been only as acted as a user of the lending service. And based on my understanding, the traditional lending, which all of us have seen over these years, is a manual and a time-consuming process.
Okay.
And it predominantly comprises of 3 steps: application and KYC process, underwriting, and disbursement.
Okay.
And usually the traditional lending, what I have observed is that they follow primarily the 4 C's approach, and which is more like character, collateral, credit, and capacity, which can be very cumbersome, subjective, and not driven based on data. So you have to rely on people to make the traditional lending happen.
Okay.
Yeah.
So, all right. So then, I mean, what is the reason began to start this company? What made you to start this company, Digimoney, Gaurav?
Okay. So I'll have to take a step back on this money. So the story goes back to 2008-9 when we started Axos, or another venture which is into KPO business with the Australian market focus. And this company has now settled pretty well with about 350 plus people on board, and we have a very good team which is managing the day-to-day operations. And it was in the year 2019, that is, I would call it maybe somewhere July, August 19, when we realized that it is time to take part in the growth prospect of India and do something in the Indian market to take advantage of the current demographic mix, which is 34% of the millennial workforce. So we were very excited when we were doing a little bit of research on what is really happening in India, because we have been operating outside India for quite some time. Though our back office is in Chennai, but then the focus has been only in the Australian market. So what we did was we performed the market research of various industries, and finally we zeroed down to finance. This is one particular industry we found very interesting. And as we deep dived into this industry, we also realized it is just not finance, but the tech finance which led to formation of Digimoney.
Guys, to the audience, just to make a note of it, what all questions that you have, just post it in the Q&A section. Shivashankar, who's the organizer of this particular event, he will be collating all your questions, and after 15 minutes, we can have the questions, audience question, and we can post it to Gaurav. Okay, and we'll move on. Gaurav, what do you think? What are the challenges that exist in a traditional lending process? If we can explain, it will be helpful. Yeah.
Okay, from a traditional process perspective, as I mentioned, I don't have any hands-on experience as a provider of the service, but then more as a user of the service. Inter alia, there are many challenges in the traditional process. I would like to highlight only 3 significant challenges which are pursuing the customers, to new age fintech companies like us. And these challenges are like extensive paperwork. Okay, there is application requirement, KYC requirement, which is very cumbersome. Even for opening a small bank account, it takes you need to really sign so many papers. Then the second thing is, from a financing perspective and lending perspective, the biggest challenge is prolonged waiting time. It takes quite a bit of time to get back. And the biggest challenge is that even like it's like this, as a customer for credit, I would like to understand if my application is accepted or rejected. Even to get that feedback, it takes a lot of time.
Okay.
And then finally, the third thing, which in my opinion is biggest challenge, is involvement of human bias and manual judgments. So even though there is a lot of reliance is given on the paper, but then unless and until like it's not data driven, it's mainly driven by the documents which are provided, as well as the manual judgment which a person takes. So and that is the reason you may be noticing that when you go to one credit institution for loan, you may get the loan or you may get rejected. Then again, you go to the another institution, again based on their judgment, they may accept your application.
Okay. So these 3 points, I think the audience right now, what we have, Gaurav, is they're all NBFCs and fintechs. I think these 3 points that they can take it to home and then they can rework on it. So that triggers another question, right? So how a traditional NBFC, right now I'm running a traditional NBFC. Okay, all right, fine. So I've been running this for long. So I want to I want to turn into a digital company, right? How does a traditional company turn into a digital?
Okay, turning a traditional lending company into digital, right? That's your question.
Yes, that's the question. Yes,
yeah. Okay, understood. Now this is certainly a very tricky question because starting a NBFC right from straight away into the digital mode is much easy. But then shifting it from a traditional company, which is like paper-driven organization, to a digital, it can be a bit tricky. However, if I were to put my thoughts together, in my opinion, the first step to move to digital is embracing the eKYC technologies, whereby, at least to begin with, digital onboarding process is used instead of traditional pen and paper based and providing all those copies of all your proof of identity and proof of address. So that is going to be the first step, which every company in this industry can embrace too. Now I'm sure all of us are aware that today every bank is saying that okay, they can open a bank account very quickly because they're using these onboarding and eKYC technologies, which is making things easier. And the other most important factor from a eKYC perspective is the use of CKYC, which is certainly doing great. In fact, we have started using CKYC, and which is basically built on the blockchain concept. So so all our data is centralized, managed with no duplication, with no repetition. So we can use the CKYC as one of the solution from an onboarding purpose.
All right. So
the second step, Mani. So this can be the first step. So basically, onboarding can be the first step if really existing company which is into lending, which has been using maybe a decent LMS, but then does not have an onboarding. If they can get onto the digital onboarding, that can bring down the efforts in terms of KYC significantly.
Okay. So you are asking the team to start with the onboarding process first, right?
Yes.
So can you tell me how does the digital onboarding work? Because people from here in this NBFC, right, they are into different products they might be having. So so how does the digital onboarding work? If you can give an example, or if you can throw your experience.
Certainly, I would do that, Mani. So see, digital onboarding has revolutionized the client onboarding process. And this has happened by enabling the 3 A's of onboarding. What today customers are expecting is they should be able to be onboarded from anywhere. Okay, anyone should be able to use this, and they should be able to use it at any point of time. Okay. So what is really important is that this onboarding facility should be available at the ease of the customer. We can't restrict the customer to operate or to come to the branch, come from between 9 to 5 or maybe 10 to 6. That becomes too much of, because today in this world, as you rightly said in the beginning, we are dealing with millennials, which is like now 34% of the population. And this 34% population wants everything instant. Okay, no more time for filter coffees. It's all instant. So from that perspective, as you rightly said, people want that convenience, and that is the reason today the Swiggies, the Zomatos, and the you take any like Olas or the Ubers, everyone is doing so well. They have been able to thrive this market because what they've done is they have brought those revolution in their respective field by ensuring digital onboarding. And that is the key to get into this digital lending process.
Interesting. So Gaurav, so the moment when you say digital onboarding, so all the traditional NBs, why don't you do digital onboarding, right? Then the moment what they think about is it cost effective, right? Is it will it increase my cost, or
certainly that's a concern. Certainly that is a concern. Now we are certainly not a we don't call, we are a startup. We have just begun the operations about 8 months ago, and we don't believe that it is an expensive affair anymore. With a lot of technology coming into play, It is just that the understanding of the technology is more important than the cost here. The cost is not so significant. It can be easily managed. We have managed it over a period of time, and that is how we have a complete tech process which is available, whereby we are able to lend money in such a short period of time.
Okay. So that comes another question. How see the one of the major challenge to all the NBFCs, right? Customer acquisition cost, correct? So yes. How is it even helped reducing the customer acquisition cost to NBFCs, Gaurav?
Okay, the customer acquisition cost, yes. See, it's not an easy answer, Mani. There is a certain cost which has to be incurred irrespective. Okay. Now we are talking about two things, right? One is we are talking about the traditional onboarding, and then we are talking about the onboarding which is driven completely by technology. Now, if you compare both these possibilities and these two methods of operation, what happens is that it's like this. Technology is a double-sided sword. Okay, technology is an enabler, but at the same time, it comes with a cost which every one of us are aware of. Now, the only way we can reduce this cost is by making it very, very effective. Now, I'll give you an example. Let's take a tech platform whereby there are 100 applications which come on board. Okay. Of that 100 applications, some of the applications may get stuck at KYC because there may not be sufficient KYC data available from the user. There can be some of the applications may not be eligible for credit. Okay, as a result, you may have to put them down. And there can be only a certain percentage of applications which go to the end process, which is disbursement. Okay, sanction and disbursement. Okay. Now, let's talk numbers. When I say 100 applications, and let's say we are making 5 disbursements out of that. Okay. You will have to spend for the entire 100 applications the money which is required to complete the process until until at least the KYC and the credit evaluation, which is underwriting.
Okay, fine.
Okay, so what it implies is that the cost of onboarding. So we can't talk about the absolute cost of each application. So my absolute cost of each application can be very low. It can be maybe some, maybe few. It can be just less than 100 rupees. But then, what we really need to see is what is the composite cost. So, what is the cost I'm incurring to disburse those 5 loans? And as a result, what happens is that conversion ratio, when you are on a tech platform, the conversion ratio between the number of applications to the number of disbursement becomes very important.
Okay.
Does that answer, Mani?
Yes. If you can throw a number approximately, say starting from an onboarding, right, till assume that if the customer is a happy path, and if I am going to apply for a loan and I have a very good eligibility and all, right?
So you're talking about a straight through customer who comes on board, and so you're asking about the absolute cost, okay, of only just processing just one application.
Correct. Just one application, and it is a successful application. Yes. In that case, what would be the cost?
That does not cross more than 300 rupees per application.
Okay. 300 rupees per application. And if a traditional NBFC, they will be going and having the personal discussion, right, PD, and for a petrol cost itself, it comes around 150-200 bucks, right? So yeah, interesting. Cool. So coming back to the technology, right? So there is a buzzword called API. Everybody use the word API, right? Yeah. So the people who are not completely new to technology thinks what's totally different on APIs and all. So we like to know what kind of APIs. First of all, what is API and what kind of different APIs available to the lending ecosystem? If you can explain a bit, that will help us.
All right. I'll certainly not go into the technical. Rather, I'll talk in the layman's language. Okay. See, it's like this. API is nothing but connecting two different systems. Okay. Or passing data from one system to another system for a certain use. Okay. Now, and it's certainly a complicated word when you look at it from outside, but it is very simple when you start using it. Okay. And this entire gambit of loan process, okay, can be automated right from KYC verification to loan disbursement with the help of various APIs. Okay. Now let's start with something like I can give you an example of eKYC. Okay. Now eKYC can be performed and there is an option to identify the customer using various government issued proof of identity and proof of address. Okay. Now we can take right from Aadhaar, PAN, driving license. You can take maybe a voter ID. So any identity can be easily verified digitally. Okay. Only the information that you require is maybe a copy of the of that identity card, and or in some cases even if the serial number or the number of that ID, that is sufficient. For example, your Aadhaar number and the PAN number. That is sufficient to verify your identity digitally. Okay. And it all happens in real time. Okay. It's not that you collect the information and then there is a process which takes place. That is where these APIs come into picture. What these APIs do is they transfer the input which is received from the customer in real time basis to the respective government's database. Okay. And this is what we call as the big data. So it goes to those large databases, fetch the information related to that customer. And once that data is fetched, that is used in performing the KYC. Similarly, if we were to talk about various underwriting tools, digital scorecards, these all can be used for automating the underwriting process.
Understood. Okay. Interesting.
And finally, I would also add that there are APIs which facilitate execution of loan agreements. Now, there is Aadhaar-based signature. So what you can do is you can use your Aadhaar OTP to e-sign or digitally sign a loan agreement. Similarly, there are disbursement and collection related APIs whereby you can do a eNash. You can perform using that eNash token. You can do the charge and collect the money for the EMI. You can directly disburse the money into a customer's bank account. You can use various methodologies like UPI payments, debit card, net banking. All these methods can be used for helping the customer to make the payment.
Understood. Okay. Cool. And see, when an NBFC started being digital, right? So then we'll be getting a lot of questions from RBI, right? What is the regulatory challenges that you face? How the data is secure and all. So there. Can you tell me what kind of regulatory challenges that current NBFCs are facing?
Okay. So you're talking about the NBFCs at large or just the technology-enabled NBFCs?
Both.
Or maybe I can cover both. Okay.
Yeah.
All right. To begin with, now, if you ask me from a NBFC perspective, and we being a startup, and we are not a systematically important NBFC because our asset size is less than 500 crores. There are not really big challenges that we face so far. Our compliance requirements are very low. Like hardly we need to file 3 filings, one of which one is quarterly, and then the remainings are on other interval like annual.
Okay.
Even in that case, see, even let's say if I am a systematically important NBFC, okay, and there are more reporting norms whereby I need to follow various prudential norms and provisioning norms. Even in that case, if the systems and reports are designed to auto-generate information required for regulatory filing. Okay. If we can ensure that our LMS is supporting this, okay, with very limited or no manual intervention, the reporting can be managed with a lot of ease.
Okay, interesting.
Okay. However, having said so, now there is this new scale-based regulation which has come into picture. This is the new thing which is come from RBI. I'm sure this can bring in some challenges for one of the reasons that it is new. And the second thing is, yes, it can be cumbersome because there is a new concept called a new asset classification, which has come, which is called as the special mention accounts.
Yes, SMA, yeah.
Now these SMAs or the special mention accounts, I'm not sure if the existing NBFCs are geared up to report such accounts, and if the LMSs which are used by various NBFCs and the banks, they will be able to do this. Okay, banks have been doing this, but now it is as if we have to adopt to almost the requirement of a bank, which can be a bit of a challenge. But then we believe that now, for instance, we use your LMS, the LMS which is powered by Hawaii, and we have ensured that from a reporting perspective, this particular thing is just a configuration. So from our reporting perspective, what we just need to do is we need to modify our reporting norms from a provision and from a report generating perspective, and we can just modify it in such a way that it meets the requirement of the RBI.
Okay.
Which is certainly a plus, because we are in that case. Then what happens is that we are not relying on people to get adopt to those changes. Rather, we are designing reports which can be generated automatically from the system.
Interesting. Okay.
So the error rate comes down, and the manual intervention comes down.
Okay. And this is I mean, quick time check. We are at 5 now, so we'll just want to have take few questions on the from the audience side. So the question from Parul is, so there are few institutions who's doing it in a traditional way still, and there are certain few information they wanted to do satisfy the millennials, right? So how lending institutions can balance between these two expectations is what the question.
No, that's a beautiful question, and I would like to answer this in a very simple way. Okay, how we need to bring in these technological changes is that it is very, very easy to use. Okay, if our focus is more on reducing the cumbersome process. Okay, let's say if the process is very cumbersome and the information requirement is very high. Now I've noticed that there are so many applications which ask you n number of data points. Now I'm not really sure if they're really using it, and if they're not using it, then we don't know why they're collecting it. So what happens is that because of that cumbersomeness in the process, okay, millennials are able to fill, because I'm sure there are a lot of us, and certainly Mani, yourself and myself, we can fit into the millennial definition. So we are very quick in operating with our mobiles, right? We can fill in the information, we can use the autofill function, and so many other shortcuts which we are aware of. Okay, now it is easy for us. But then when it comes to, let's say I go back to my father, okay, now my father is not going to be that quick with the filling of the information. So he will expect that only relevant information asked for, and the process, this digital process, okay, which is already very difficult to explain to him that this all works digitally. Okay, it's not so easy. So even though it is so difficult to explain, now it becomes all the more, they become all the more reluctant. But the moment it is easy, okay, when they know that, okay, I do this, and my work is over. Okay. Then the adaptability from even non-millennials is very high, because today you go to any rural places also. Okay, let's talk about some rural background people also, or people who are really living in the interior India. They have smartphones. They know how to use smartphones, and if we can use those regional languages to a certain extent, they will certainly go and take help if they're not able to. It's very simple.
Right. Yeah. Okay.
Yeah.
So there are a few questions which has been part of the. We'll be covering those topics in the next few minutes, and so I'm skipping those questions, Gaurav, and yeah. So coming back. So how can we resolve connectivity issues which may tend to NPA in the digital lending and collection procedure? Connectivity issues, right?
Collectively, you're talking about the not the technology connection, but you're talking about the collection related.
They are talking about the connectivity issues. That is the question, I guess. So let's take this question, right? So the people who are uploading the documents digitally, right? They might have some connectivity issues while uploading these documents and all. So how are we going to help in that?
Okay. Now, if you ask me today, Digi Money, we don't ask our customers to upload any information at the moment.
Super. Okay.
There's no scanning. There's no capturing of any image. It is very well. What we do is we have developed a process whereby we work on the fetch technology. So we only fetch the information directly from the various government databases, and then cross-reference that in the real time. So what we do is we reference the information, cross-reference the information received from two sources. That way, we are able to check the correctness of the data points, and that kind of makes the process very easy, because there is really no scanning involved. So let's say, and I'm not saying that everyone has to adopt to that methodology. Now, the technology is such that if we are able to control, when we are scanning the images, if we can control the size of the document, okay, and there are various service providers who can help the NBFCs to do that. If we can ensure that there is a certain limit on the size of the documents, then these connectivity issues play maybe a very little role. But then, as the question has been raised, we cannot deny the impact of the connectivity. If you are really in a place where you are not able to get the proper connection, internet connection, and you are not able to connect sometimes, and there are alternate methods also. For instance, instead of a OTP based onboarding, today we see that we are in Chennai, no problem. We are in all A class cities, no problem. B class cities, no problem. But then if you go to some parts of the Northeast, or if you go to Jammu and Kashmir, okay, you don't get OTP. Okay. Now, what do you do in that case? And there are service providers who can verify your identity even without sending you an OTP. So there are technologies like that. So so it is only about, we just need to keep venturing into what new products people are bringing in, and how we can use them in our process without deviating from our current process significantly.
Okay.
Because it is only when we move from our current process, the cost goes up. But if we build everything around our process, if the base is set, After that, it is only about building around that base.
Got it. So we'll quickly move on to the next set of questions because we have a very limited time, Gaurav. So
Yeah, no worries.
we'll take those questions in a later time. What is what is the best turnaround time that you had while disbursing a loan? Any numbers that you can throw here, Gaurav?
Okay. Yeah, I can certainly do that. And before going into the absolute time, I'll tell you, or rather, I'll share with you why we are able to lend so quickly. What is the what is our sole mantra, and what is our app building process? Okay.
Right.
Now, what we ultimately want is our customer should get the loan as quick as possible in a hassle-free manner. Okay. Now, again, we are talking about the same thing, millennials, and they want things instantly. Now, it can be whether I approve him a loan or whether I reject him. Both these information have to reach him in real time. It has to be instant.
Instant, yes.
If the customer is rejected, but then I don't get back to the customer instantly, then they get annoyed because they're not able to try elsewhere. They believe that something will happen here and they have a pressing need. So what happens is that, so in our opinion, and this is what we follow at Digi, we ensure that whether it is sanction or rejection, we communicate both these points in real time. Okay. Now, what is the other reason that we are able to disburse loans in a shorter period? And I'll tell you, since you asked this question, what is the shortest time frame? There are people who have completed the entire process in 6 minutes time. Okay.
6 minutes, is it?
Yes, 6 minutes, but that's, I see, again, it's very optimistic because maybe this guy knows about the process very well. He would have done, but when I say average, the average would be somewhere around 7.5 minutes is what we can give a straight through process loan, right from registration to the disbursement.
So you're saying, if I understand rightly, so I have downloaded the app of Digi and say I've started entering my details, and as soon as I enter all the details, I'll be able to get a loan within 7.5 minutes. Is my understanding right? So I'll be getting the loan amount. I'll be able to get my loan amount in my personal account within 7.5 minutes.
Absolutely, right? You can start spending in the next minute.
Interesting. I should go and download your app now. So how is it? Yeah.
See, okay, and I do understand your question and the surprise money. It is certainly with a lot of we have done a lot of piloting, and we have done a lot of work behind making this this facility available on a purely on an instant basis. So we call it as our Insta personal loan app, and the reason it has to be really Insta. What we want is that the disbursement, it is not just the sanction, but the disbursement has to be on the real time. This is what we want. So what we have done is we have built our onboarding process as a paperless and low upload process. Most of the data, as I mentioned earlier, is pulled using data fetch and cross-verified with independent sources. Okay. And as we move along, we are improving our system. For instance, we launched our phase 2 of the app, and there were significant changes done, whereby previously we were facing a lot of issue with Aadhaar SDK, which is nothing but the offline Aadhaar KYC, which is certainly we are facing problem because we know that this is just a beta from UIDAI. Okay, it's a beta release, and because it is a beta release, so what is happening is they're making changes, they're improving the system. As a result, there is a lot of interruption which was happening. So we said, okay, what is the solution? So we worked on the solution. We knew what is the problem. We worked on the solution. We replaced that technology with a different technology. And today our onboarding process is seamless. And the best part is, once the onboarding process is completed, The underwriting and the using various technologies like alternate credit and maybe bank statement analyzer, we are able to generate those parameters. We call it as the 70 parameter checklist, based on which we analyze a lot of data points to take that decision. But that decision happens in just seconds. It just takes few seconds to perform that exercise. And after that, it is only registration and disbursement, which is very easy with the current APIs that we use.
Okay. So I'll come to that API part. So what kind of APIs that you're using in a different segment? Okay, I'll take it in a later way. And how many downloads that you have right now, and how do you able to make it in a short span, Gaurav?
Okay. So we launched the app on the 12th of February, and initially for the first 2 months, that is until 31st March, we were doing pilot in Chennai. And in the month of April, we launched in other cities like Bangalore, Coimbatore. And then slowly we are going step by step and increasing our presence. We are today available in Hyderabad, Hosur, Mysore, Trichy, Salem. So total 8 cities that we are present now. And number of downloads, we are right now at 50K as per the Google Play Store page. But then if you look at the actual applications that we received, it's 120,000, which is 120,000 about a week ago.
Okay.
Maybe say there is a typical way in which Google works, and it is very hard nut to crack to identify how it really works. So we will be touching 100K mark on the Play Store maybe in a day or two. We're just counting on it and looking forward to it.
Great, Gaurav, because within very short span of time, we have reached 120,000 downloads. I mean, 20,000 loan applications. It's really significant numbers. I think.
See, and I can give you quickly. I'm certainly aware of the time limitation, but then the main important factor what we consider is the word of mouth marketing is the only thing which is working for us now.
Even in digital, is it?
Yes, because what happens is that one successful customer brings in a number of other new customers. Even I wouldn't deny that we are not using the digital media marketing. We are using it, but then our spend is very negligible. Like we are hardly spending anything. And most importantly, what we've done is we have taken a lot of feedback from our customers. And the primary reason why our customers refer us to other customers is because the app is very user friendly. As there was a question, I'm sorry, I missed the name of that person. Even people who are maybe slightly elderly, they're able to navigate through our app very easily. The other factors are low rate of interest, very low processing fee, and all these have been possible because we are ensuring that our cost of funds are low and the charges that we incur onboarding a customer is also very low. One of the most important thing is that, and which I believe one of the reason why we get so many customers day in and day out, like today we are getting somewhere around 500 to 600 applications per day. And one of the main reason is our customer care team, which manages the toll-free number and the email support. They're really amazing.
Interesting. So the people who have joined as an audience might have thought that these many downloads and these many loan applications would have brought it through Google Ads or digital marketing, but they would have got a altogether different answer, Gaurav. It is interesting as well. Yeah, cool. So coming back to the technology, right? How technology helped Digimoney to achieve these kind of milestones within 7.5 minutes and these many cities and these many loan applications? How technology helped Digimoney?
Yeah, Mani, technology has certainly accelerated our growth multifold, and there are two main points which contribute to this milestone. And the first one I would say is the customer onboarding, which we have been talking so much about. In fact, just to tell you, we asked for just the PAN and date of birth in the phase 2 of the launch, which we have done. rest all information is just auto-filled and fetched from the database. We're just cross-referencing those information. And the larger audience reach with easy scalability to newer cities is another factor which I would contribute to this milestone. So today, if I have to expand to pan-India basis, it's going to take me just 15 minutes to expand to pan-India basis. That's how we have built this technology. And purely this has been possible because of technology.
Interesting. And next is the most crucial question. Even most of the questions that has been asked in the Q&A also, this credit evaluations, right? So how is that the credit evaluation is done to your existing customers, and how you have reduced your NPA and all?
Okay. Setting the standard is a one-time process. Okay. How do we underwrite a customer? This is certainly a one-time process. We have done our part. We have done our best to design this process. We have a proprietary rule engine which we have designed, which helps us in, as maybe it may sound as envious. We are in the 9th month of operations now, and with 0 NPAs so far.
0 NPAs.
Yes, we don't have any NPAs.
Interesting. Okay.
And our credit evaluation process is a combination of 3 things, which is use of bureau data, whereby we are reviewing the credit history using bureau data. We use alternate data analysis to generate those parameters which can be used for analyzing the credit eligibility and the profiling of the customer. And we also use the traditional method of bank statement analyzer, whereby we have automated this bank statement analyzer, and there are data points generated from these bank statements to take that credit decision. And all these data points are generated using with the use of the artificial intelligence and machine learning tools, which feed into our proprietary rule engine to risk profile the customers. So every customer has to undergo this process. And like any other NBFC, our weightage to bureau scores are on the lower side, and more reliance is placed on the alternate data points.
So when it comes to alternate data, right, I'll just throw, the alternate data, this is another buzzword, Gaurav. So can you explain what are all the data points that you usually take it from alternate data? If you can throw some few examples.
Yeah, certainly, Mani. See, alternate data comprised of various behavioral and financial and non-financial parameters. Now, use of certain technologies, we are able to assess the social behavior of a customer. There are tools available in the market which can be used to assess how what is the spending pattern, and what is really the credit hungriness of a customer.
Okay.
Certainly no one would like to lend to a customer who has been just going shopping around every app and every financial institution to get some loan. That means certainly something is wrong. So similarly, there are like various, it's a combination of financial and non-financial data. Now, from an alternate data methodology perspective, there is, a lot of expenditure today happens over wallets, right?
Correct.
Now we use Paytm, we use PhonePe, Google Pay, and so many other wallets and UPI enabled technologies which we have been using, which kind of makes it very difficult to assess if a particular customer is what is the spending pattern of a particular customer. So all these alternate data points, they help in analyzing like what is that this customer is spending on. If this customer is spending on the luxury goods which he is not entitled to at the moment, for example, a person I'm sure everyone is aware of the jokes around a particular type of mobile. So the moment iPhone 12 Plus is launched, there are so many memes which are shared on social media. People say that they are selling their body parts to buy those mobile. Now that's certainly that's on the lighter side, but the reality is that there are millennials who are borrowing money just to buy these luxury items, which is certainly not a healthy thing. So what really makes important is that use of financial literacy. So what is very important from our perspective is that how do we literate or make the millennials and the users of the technology understand what is their financial responsibility and how they should use their finances, which becomes very important. And we play a significant role by rolling out various campaigns on social media, whereby we talk more about the financial literacy, and excessive credit is always harmful. At the same time, not repaying on time is also can be equally harmful, which deprives you out of your future credit eligibility.
Okay. It's a quick time check, Gaurav. Which time is 5:25. Maybe we can extend the session for 5 more minutes, and when it's 5:35, and then because we have got a lot of questions in the chat items, we can go to one by one. And before getting to the chat, I just want to get to know how the technology provider that you use, and can you give a brief on that, Gaurav?
Certainly, Mani. So from a technology perspective, we use a heaps of technology providers, right from the KYC service providers to payment banks, whereby we use their eNACH, eMandate, and collection APIs. We use a lot of alternate credit methodologies, and there are APIs built around those technologies, whether it is bank statement analyzer or any such other. Like there are technology which are available. You can even get access to the email ID, Gmail of the customer, and then you can analyze the data, the financial data which is available on email. So there are heaps of technologies which can be used. But the most important thing is your loan management system, which becomes critical. And as you're aware, Mani, we are using Habail. The loan management system is powered by Habail. And the best part is that, yes, we are able to customize it to our requirement, which is certainly helping us with the changing times, with changing requirements, and which is certainly also helping us to keep our pricing low. So that's the reason our processing fee is like very competitive. Like it's, I would say, in technical or technology market, fintech market, our processing fee is very low.
Interesting. Cool, Gaurav, and thanks for the compliment. So any NBFC in this space who's part of this audience, if you like to have a digital roadmap that you like to have a discussion with us, just feel free to contact us, and we'll go on to the questions, specific questions. So how do you differentiate from your competitors, Gaurav?
Okay. See, it is always good to have healthy competition, Mani. While we are a unique combination, a fintech and an NBFC. Okay. Our focus has been on the technology, and that's the reason today we are here. There are other operational points that customer like most in Digi Money Finance, and the best ones I would quote is the faster turnaround time, lowest interest rates and the processing fee, and excellent customer support. These are the three main functions which are kind of differentiating us from maybe our competition.
Okay. And what about the loan aggregators? What is the scope for you?
It's like this. People use loan aggregators, and there are models like co-lending and providing FLDG guarantee. We are slightly averse to that money because it comes with a lot of cost, and we believe that the moment that cost goes up, the lending cost also goes up significantly. And the biggest challenge is that the moment lending cost goes up, the intention or the intent to repay goes down, resulting in higher NPAs. So our intent is that generally, even if we are to kind of act as a aggregator or we using the services of the aggregator, one thing we will ensure is that we ensure we strike a model whereby the lending is at a very reasonable rate.
Okay, so basically the question comes from Satish, who's asking, is Digimoney will be is Digimoney partnering with any loan aggregators? Is it shall I take it as a yes or no, Gaurav?
Right now we are not partnered with any loan aggregators. We are, as I mentioned, we are a tech plus NBFC, so we have our own books, and we are using our own technology to reach the market, which is really giving us a very good boost. But in future, I can certainly see some partnerships happening with aggregators, not directly in the traditional way, the way it has been happening, but in a way whereby if it is a very a modern kind of a requirement, maybe something like a buy now pay later kind of a arrangement, that is where maybe we would like to foray into, but not in the traditional at the moment. But we don't know about the future. If we get something interesting, we can certainly.
Okay. We will, as I said earlier, we'll be extending the call in another 4 minutes. So how would you describe an efficient user flow? It's a quick process, step-by-step process. Shrey has asked this question.
Yeah.
An onboarding process. Can you say stage by stage, step by step?
Yeah, certainly. I've got the question. Maybe your voice was breaking a bit, Mani, but from a process perspective, the process is simple. We start with registration, then the KYC, then the credit underwriting, and then once the credit underwriting is done, we go ahead with the offer, the loan agreement, registering the e-mandate, and then finally the disbursement. So
I think before, there will be a loan agreement in midst of it, right? So after Inash, yes, okay, got it.
Yeah, so there is a loan agreement. Yes, I did mention that. So loan agreement. Once loan agreement is signed, then we go ahead with the final step. Yeah, which is disbursement.
Okay. And so how the disbursement was done to the banks if they don't have Inash facility instead of the NPCA?
Okay, so you can go for. Are you talking about some of the banks where we can't have this eNACH or the paper NACH? See, paper NACH is available with almost every bank which is available. So even though it is a time-consuming process today, neo-banking applications are bringing in new technologies whereby even this paper NACH has become very easy. And less time consuming. You can use Aadhaar based approach to kind of register the paper NACH, which can reduce the time significantly.
What about the tools to prevent fraud, Gaurav? If you can name some tools that you can prevent the fraud.
Okay, if you ask me, we are not using currently any tool which can actually prevent fraud. However, this fraud prevention is inbuilt on the process itself. Okay. Now, if you say that there can there be a specific tool which can really help you in preventing fraud, then I'm sorry, I don't think so. There is such a possibility because there are different ways people are inventing to perform frauds. So how it can be avoided, in my opinion, is that with each process step we should have the fraud protection measures taken, and it can be just by cross referencing the information received from one source to another source and so on. Having said so, yes, I do have come across some of the fraud prevention whereby there is a CUG which is created of all the all the financial institutions, and all the fraud cases which are reported are part of that CUG, and you can just run a check on that database to see if there is a fraudulent customer which is coming onto your platform. But having said so, a new fraudster cannot be avoided. So the ultimate thing is going to be that you built in your process in such a way that the frauds can be avoided. For instance, our bank statement analyzer that we use, if there is a fraudulent bank statement, it identifies very easily. There are so many fraud checks which are available on the statement. So
okay. And one last question, Gaurav.
Yeah.
How do you believe this eKYC? Like, how are you ensuring the document are trusted if I do an eKYC or CKYC?
See, they are coming from that's what I said. We are really not relying on the information which is provided by the customer. Instead, we are fetching the information from the government database and then getting the customer to confirm that information. And we are cross-referencing that information using the application data, which makes things very easy. And we have not come across a KYC issue so far. It's been very smooth.
Perfect, Gaurav, and thank you so much for joining this webinar and then giving some interesting insights on that. There's one last advice to the NBFCs. Can you share that, Gaurav?
All right. I would not call it as an advice, Mani, first of all, because I'm certainly not an expert and my experience in this industry is very limited. I'm learning day by day. And however, if I were to share my 2 cents, the first thing will be, and which I've touched upon slightly, avoid exorbitant rate of interest to capitalize on the immediate need of customers.
Okay.
Because customers, the moment they come out of that emergency, they start realizing that they have been taken advantage of their situation.
Okay.
And their intention or the intent to repay goes very low.
Okay. Fine.
Today we have come across so many customers who say that the reason they don't want to default on DigiMoney loans is because why should I default on a less expensive loan?
Right.
I would rather repay this and then borrow another loan with the DigiMoney Finance.
Okay.
The second point I would like to convey is that one of the primary reasons why NBFCs charge high interest rate is due to higher borrowing cost. And this happens typically in a co-lending and FLDG model. So people borrow at 14%, 15%, and then they lend at 25 and above, which makes it at least I would say that I'm not going to discourage any NBFC from doing this, but at least at early stage, like a startup like us, we would not like to venture into this unless until we are able to establish and demand a lesser rate of interest, maybe 10% or 11%. Yeah. And the only final word would be, as I believe customer is the king, and with a lot of financial literacy, we all know that the personal loan industry has grown by about 4.5 times in the last 2 years. Okay. Wow. So I would say that we all as part of this ecosystem should focus on customer centric processes and approaches, so that we are able to serve our customers in the best possible manner.
Okay. Thanks, Gaurav. Thank you so much for explaining things in patience and with your experience. And
thank you.
I think there are many questions which has been unanswered. Sorry guys, with the interest of time, we may have to end this session, and we'll take those questions offline, and we'll be able to have a separate discussion with Gaurav and then try to answer those remaining questions separately, and we'll be sending out an email. And please get in touch with us. We are going to conduct sequence of events, and people like Gaurav will be talking their experience like this. And that's it, guys. Thank you so much, Gaurav. Thanks for the
thank you, audience. And if you have any questions, I've shared the email ID in the chat as well. If you have anything, I'm happy to answer. Thank you so much.
Perfect.
Thanks, Mani.
Thanks,
Thank you
Gaurav.
for hosting. Thank you, Hawaii team.
Thanks.